When I think about the risks to my investment outlook, I think it does surround, are we actually being too bearish, if anything? The media, social media, paints a very negative view of markets and the outlook. Endless talk of recession. But when I look at previous recessions in 1990, also the great financial crisis, they really don't compare to the current environment. We had unemployment, almost double-digit numbers, extreme stress in the financial system. I know we've had some challenges in the banking system in the US, but really not on the scale that we had in the great financial crisis. And yet I think media and social media paint it as a very bleak outlook and this recession being very difficult. I think it'll be quite a shallow recession, if anything, affecting not all sectors. And therefore, I think we should come out of it reasonably well without too much destruction of capital and opportunity. So I think actually the negatives really could be overplayed within this cycle. I think the other negative that'd be challenging is still geopolitical. I think the tensions between China and America and obviously Russia and the rest of the world, I think still are playing out and very difficult to see in the short term any relief, I think, in terms of those. But those put a discount on markets, so I think that's priced in to some extent. And therefore the opportunities are really for investment, for earnings, corporate profitability to rise, and as I mentioned earlier, for interest rates, the cost of capital to fall. I think really if we look out into the coming months, not a lot's going to change in my opinion. I think we're going to continue to see inflation at a fairly elevated level, but hopefully starting to fall meaningfully within European markets. Still elevated interest rates there, and that's the challenge, I think, for a lot of investment markets. The cost of capital is now pretty punitive, and therefore that is going to make a challenging environment for making investments. But I think more interesting to my mind is actually thinking a little bit beyond maybe the next 2 or 3 months and looking towards the tail of this year and into next year, into 2024, and really trying to see the opportunities there for investors, because I think markets actually price these things in so much quicker than we ever think. And as soon as there's an optimism, there's a sense of enthusiasm about greater earnings, rates falling, then I think markets will react quite quickly to that. And therefore, I think it's that 6 to 9 month view that's really important for us as investors to get a good grasp of, or is it going to be 12 to 18 months? And I think the key things we're looking for are clearly central banks to say, look, inflation is now falling at such a meaningful rate. We can either hold rates here, they don't need to rise, or more importantly, when they can start cutting rates. And I do feel that when rates peak and start to fall, historically has led to the lows in markets and an opportunity to invest at good prices. I think we're seeing, corporate results actually holding up very well. I think one misunderstanding a lot in markets that with inflation high, nominal growth is pretty good. So actually pricing power is okay for a lot of companies, and they're controlling their costs. I think the other area with my hat on of global markets, EMEA, Europe and Asia, is really understanding how China's going to be playing into the next 6 months. We saw China reopen from their COVID lockdowns back at the end of October last year. And really the pace of growth has disappointed some. But actually, I think when I look at the underlying growth in terms of domestic consumption, it's looking pretty good. It's the export growth which is still struggling. So I think China, being the second largest economy in the world, can help drive some further growth for a lot of corporate earnings. So I still, at the end of the day, feel there is optimism, but it just needs that lens into the end of 23 and into 24 to see how things can get better in terms of corporate profitability and interest rates falling.